Good morning and welcome back to our 10 o'clock session of the Wisconsin Lieutenant Governor's 2025 Small Business Academy. It's my pleasure to introduce Christopher Cote, Business Microloan Program Manager with First American Capital Corp. Christopher, I'll leave it to you.
Perfect. Good morning, everybody. Can you all hear me?
Yes,
Perfect.
sir.
All right. Welcome to our panel session on gaining insights into financing options for small businesses. Access to capital is one of the most critical and often the most challenging aspect of running and growing a small business. Today's discussion, we're going to bring together a dynamic group of professionals from diverse business lending institutions, each with unique approach to supporting small businesses and startups and underrepresented entrepreneurs across Wisconsin and beyond. Our panelists represent a spectrum of capital providers, from traditional lenders like U.S. Bank to alternative mission-driven lenders such as Wisconsin Women's Business Initiative, or WWBIC, as I'll be referring to, a community development finance institution that offers SBA-backed financing and innovative tools like Kiva microloans. We're also joined by the Hmong Wisconsin Chamber of Commerce, which operates a revolving loan fund specifically designed to meet the needs of culturally diverse entrepreneurs. Also, the Regional Business Fund, which serves as a nonprofit regional lender working closely with economic development partners to provide flexible financing options to small businesses across multiple counties in Wisconsin. As the moderator, I'm representing First American Capital Corporation, a native CDFI based here in Milwaukee. At FACC, we support underrepresented small businesses through lending, technical assistance, and business coaching. Our goal is not just to provide funding, but to build long-term business success alongside the communities we serve. Today's session will start with a panel introduction, move on to some moderated Q&A, and finish with a chance for the panel to address any audience questions. Without further ado, I'd like to let the panelists introduce themselves. Please take time to explain who you are, give some background on your organization. If you guys have any niche products or programs, let's talk about that here. So we'll start with Amanda from Regional Business Fund.
Christopher, we're diagnosing an issue with Amanda's audio right now. So if you wouldn't mind moving.
Yeah, let's go. Macy, if you're ready, you want to take off?
Sure. Can you hear me okay?
Yep.
Okay, great. Hi, everybody. I'm Macy Herr. I'm the CEO of the Hmong Wisconsin Chamber of Commerce. And I've been with the Chamber for about a little over 5 years, 5.5 years or so. And we are, as Christopher mentioned earlier, we are a CDFI, a Community Development Financial Institution. We've been around for over 20 years. We operate, as mentioned earlier, a revolving loan fund, and we also provide technical assistance. Our mission is really to economically uplift those from historically underinvested communities. So even though we have the Hmong and Hmong Wisconsin Chamber of Commerce, we certainly serve more than just the Hmong community all across the state of Wisconsin, and we're headquartered in Milwaukee. We do lending up to $150,000, just small businesses, but also if it's if we do provide a loan and someone decides that they want to also purchase a commercial space for their along with their small business loan, we will also provide up to, at this time, up to $300,000 total for those individuals. So we have staff all across the state. I will also say that we provide different types of resources, such as opportunities for people to engage with us. We've done helped out with many grand openings, lots of networking opportunities all across the state. More recently, I like to say we did a networking tour all across the state. So you might have seen some of us, going across the state, meeting with the different communities, so they get a chance to know who we are. I would say that's we do a lot. I would say a lot of those who come to us have businesses in the food industry. So a lot of grocery stores, restaurants, catering, places. So that makes up probably a bulk of the businesses that we work with. But once in a while, we get some really fun ones in there too. Those who operate like photo booths and things like that. That I will say, if you've heard of Pixel Booth, that's a business that, really that came to us to start with, and now has really grown and works with all different types of corporations and businesses now, and quite successful, and so keeping them busy. So we're really, really proud of the fact that they were able to come to us. We were able to put them out there into the public, and now they're doing so well.
Very cool. Yeah, thank you for that. We'll get a few questions in later about learning a little bit more about the Hmong Chamber. How about Bella from WWBIC? You ready to go?
Yeah, thank you, Christopher. Hi, everyone. I'm Bella Skrichev. I'm the Kiva Capital Access Manager at WWBIC. We kind of have a 4-column approach to what we do at WWBIC. We support with access to capital through the Kiva loan program and our WWBIC loans. Our Kiva loans go up to $15,000 at 0% interest. And then our WWBIC loans go up to $350,000 as a CDFI that we're able to offer. And then we have our second column, which is training. So we offer over 200 free trainings a year. Our third column is connections and mentoring, and then financial wellness. So at WWBIC, we really take a holistic approach to the small business owner who I feel like all entrepreneurs can connect with the idea that they're expected to do everything. It is kind of one of the hardest jobs you could choose to do, and I think that's why we have the Small Business Academy, because everybody's expected to know everything, from being your own marketing person to HR to administration to your own finance person to kind of knowing how to do your own accounting to taxes to sales, and nobody comes into being a business owner knowing everything. And being an entrepreneur takes constant learning and growing. It doesn't matter if you're just starting out or if you're 5 years down the road, things are constantly changing, to point of sale systems, to accounting, to laws change every year. So WWBIC takes that holistic approach where we know you're constantly in need of learning, so our classes are free. We have classes on all sorts of things. And then we have access to capital, because we know that those who are starting businesses who don't have that big chunk of change just sitting around, that getting access to financing as a small business is really hard, especially when you're starting out. And banks typically won't take you up until you're 3 years in the running or 4 years in the running. You have that good credit history and you have a history of your business doing really well. So as a community development financial institution, our goal is to be that gap between starting and getting you in the long run to that long-term banking relationship. So that's just a little bit what we do. I don't want to dive into some of it. We'll get more into it. I'm sorry, it is so early. Like, my brain is just melted, so I apologize. But yes, thank you.
Yeah, no problem. Yeah, we'll get a little bit more into there. It's something I tell entrepreneurs probably on a daily basis. I think there's a lot of anxiety, especially with startups coming into, sitting in my office with me, having a meeting, and I like to tell them that we in no way expect you to know everything. You're really good at, making your widget or providing your service. That's why we exist. We're here to help you get up to speed, with our pathways to business banking. So yeah, very, very similar here in our office too. Let's move along to Vanessa.
Thanks, Chris. Can you hear me? Okay, good. I'm just afraid. So my name is Vanessa Sancha. I'm a business access advisor at US Bank. I cover the Chicago and Milwaukee market. I actually partner up with my colleague, Mikai Brown. I've been in banking for a little over 16 years now. A little bit about my role. I fall under what we have at US Bank called US Bank's Access Commitment Program. So it's really our approach to helping individuals and communities on their path to building generational wealth. This Access Commitment Program, it has 4 parts to it. So it's Access Capital, Access Business, Access Home, Access Wealth. My role falls under Access Business. and a little under access capital. The program was created in 2021, and part of that was really just for our business access advisors, which we have 18 of them across the just supporting small businesses, connecting them up to available resources, advising them on how to raise capital, helping them network with other businesses. So there's that like networking piece to it, providing, and also like other providers or alternative lending solutions. It's like our missions, it's really simple, right? Like we're just trying to make access to capital less intimidating. And I think that a couple of you said like that's been an issue or ongoing thing with entrepreneurs. So making that less intimidating and more inclusive, especially for underserved entrepreneurs. I've seen like a lot of success when businesses have a plan, right? They have to understand what the financials are telling, and then overall like their business's financial well-being. Access to capital, I think it's more about than just getting an approval or getting something approved. I think I just kind of always try to talk about that. It's more about like having access to a real shot of getting approved. And that's really just working with key partners and having a good ecosystem around you as you're growing, starting or upscaling your business. I guess I'll talk a little bit about like the types of funding and capital offered, right? Because we are a bank. So US Bank is one of the largest banks in Wisconsin. We bring all the tools and capabilities that a large financial institution has. So really depending on what the business owner's needs are and some different qualifying factors, we provide, you know, a wide range of lending products and solutions for our small business clients. So we really just want to meet them where they're at, you know, whether they're starting up or they're established. We have the tools and resources internally to be able to grow and scale with you. We have a couple, I'll just talk a little bit about like the lending part, right? So we have business owners that they apply or for a quick loan, which is what we call the quick loan, but it's a term loan. So they can be used for various things. It can be for like, and then we also have equipment financing, and then just for those larger purchases that make sense, and then loans for commercial real estate purchases, and then SBA loans as well. It really just depends on that business's need, what their goals are as a business owner. And sometimes it's depending on the unique situation too. You have to kind of have a deeper conversation with your business banker. So I definitely encourage everyone to reach out to a business banker, make sure you have that good relationship with them, and just determine what the best steps are and kind of weigh out all your options before just, you know, taking action. It's kind of like just kind of collect information, reflect, and then react, I guess, if you want to put them in like simple steps to follow. So that's kind of me and US Bank in a nutshell.
Very cool. Yeah, I like to tell people that. So one comment I get, especially maybe from people that have been turned away from traditional financing space, or just, you know, people that are unfamiliar with that process, is I hear they don't want my business, and I have to correct them. I'm like, they absolutely want your business. It's just, it's more of a structured program. And again, that's why we're here. You know, at FACC, WWBIC, I know as well, we partner with the traditional funding sources. I have colleagues at all the major banks. You know, when we find someone that we think would be a good fit, we help them. And any businesses, any of the attendees, if you're interested in pursuing that space, a great stop is actually a CDFI. Even if you're not intending on pursuing financing through us, we would love to get you in touch. We'd help you navigate those waters. And you know, as far as getting in touch with a business banker, that's, you know, one of the key things that we do here. So definitely would like to have some conversation about that. And then we'll circle back to Amanda. Did you guys get that resolved?
I think so. Can you hear me?
Yep, perfect.
Okay, great. Of course, it worked perfectly yesterday when we tested it. So my name is Amanda Veith, and I work for the Regional Business Fund. I am a lending specialist here. I have been for about the last 2 years. So I'm doing credit analysis and underwriting for small business loans or business loans in general. Prior to this, I was working at our local credit union in personal banking for almost 12 years. So kind of was an easy transition going from helping people with their personal financials into helping people who wanted to be business owners in looking at their financials and things like that and helping them get the funding they needed. A little bit about the Regional Business Fund. It is actually a nonprofit that was created by the West Central Wisconsin Regional Planning Commission to administer a revolving loan fund. So initially, the Regional Planning Commission had some EDA money that was in an RLF, and then in the mid-1990s, the state of Wisconsin gave each community or all the regions an option to consolidate their funding. So what was, funding in small cities, villages, townships, they got to consolidate that. And when that happened, we consolidated 7 counties, inclusive of Eau Claire, Clark, Chippewa, Dunn, Barron, Polk, and St. Croix counties. And now we administer all of that money on behalf of those 7 counties. We provide gap financing when a business can't obtain all or any of their funding from a traditional sense. So we partner with a lot of banks, credit unions, the SBA, when they get their traditional financing from a primary source, and then they need help potentially with a down payment or just some extra part of it to get them over that funding gap. A couple of things that stand out that we do specifically is we take a lot of referrals for those startup programs. So, in that respect, our money is for economic development. So those startup businesses that banks can't traditionally help because they don't have the history of financials, we can help those businesses. And then we also have a revolving loan fund where we partner with traditional financials, the SBA, that kind of thing, to cover things that they can't cover. So it's like down payments, blue sky, things that aren't necessarily linked to any sort of collateral.
Very cool. Yeah, that actually, you kind of answered the first question that I had for you. But yeah, so thanks everybody for introducing yourselves. Got a good look at the businesses all the panelists are on, and I want to move into this moderated Q&A session. And actually, Amanda, if you're cool with it, I have a question for you. So specifically, when a borrower doesn't meet every eligibility requirement, how flexible can your programs be? And can you share any kind of example of how your organization maybe in the past worked creatively to support a small business that was overlooked by other lenders, or maybe wasn't, didn't have everything up to speed yet?
So there are some ways that we're not flexible, which would be that kind of that region that we work in, but there are other revolving loan funds available throughout the state, but we have to stay in our specific region. So in those 7 counties, and then there are some types of businesses that we can't help, bars, gambling, that kind of thing. We don't do any real estate speculation. It's all owner-occupied businesses, things like that. But where we can be flexible, if you meet all of those eligibility requirements, your program meets everything else, we can be a little more flexible with maybe some credit hiccups that you have. We don't have a minimum credit requirement. Most of the time when we're looking at credit, we're just making sure that everything is up to date, and or if there are kind of those blemishes, that those are in some sort of repayment program. There's some sort of story behind it. Something, just happened and it was kind of a one-off. We can also be flexible in the types of collateral that we take. So typically when we're working with most of our applicants or borrowers, and we're behind a traditional financial or the SBA, we can take those subordinate positions. We don't typically have the greatest collateral position, but that's okay for us as long as the economic benefits offset, what the collateral is, and the financials seem to support the request. We can also look at different types of collateral. So we may not take on, your business real estate. We might look at taking a second mortgage on your home, or if it's a smaller loan, a vehicle or something like that, even if the value isn't there. And then for startup businesses especially, we do have a program that is kind of like a loan loss reserve for us, so we can help in that respect. We put into the capital access program for those startup borrowers so that our funds are protected, so we can be more flexible there when it's a riskier request.
I think I was muted. That's great. And you did discuss some of the businesses, as we like to call them, the sin businesses that are ineligible. But do you guys have any project types or businesses that would be a strong fit for Regional Business Fund?
We do. So obviously, for economic development purposes, we love when child cares are opened because that's such a necessary service. We like big manufacturers, bringing in those good paying jobs, things like that, bringing in a lot of economic benefits there. But also we do like to see those smaller businesses that maybe wouldn't have a chance to move forward. And we do work in a lot of rural areas, so those smaller businesses is kind of what keeps those going. So we also like to see those smaller businesses opening up where maybe those rural communities don't have things like that. So kind of all across the board.
Cool. Yeah, it's like I like to tell clients here, we'll take a look at any deal. We'll determine the fit later. But yeah, so thanks for telling us more about Regional Business Fund.
Yeah.
Move to Macy. So I have a question for you. So chambers aren't typically known for, the direct providing capital. Can you tell us how the Hmong Chamber Revolving Loan Fund was developed and how it addresses financing barriers for culturally diverse entrepreneurs?
Yeah, so I'll try to cut it short because there's a long history there, but like many other I would say underserved historically underserved communities, in the Hmong community specifically, there was also a lot of barriers to accessing capital in traditional banks, earlier on, and so all over the state and then some. There were those who were trying to gain access to capital, but there were some language barriers, cultural barriers, and quite frankly, many of them simply did not have that network, that relationship with traditional banks. So that's where several individuals, business owners, or those who wanted to become business owners came together within the Hmong community and said, we have to do something. Let's create something that's culturally adaptive, that we can actually build these relationships with traditional banks, so that those in our community can access the capital they need. And at the time, I think there was more than just business. It was for various purposes. And quite frankly, my own father was one of those individuals who was, had trouble accessing capital earlier on and didn't have those relationships. So I think there were also earlier on, many of them, really pooled their funds to, make available funds to the community. And I found out that's not unique just to those who are Hmong in Wisconsin. I think many banks started that way earlier on, right? Pooling of funds and then putting it out there so people could access it. Since then, though, of course, the Hmong Wisconsin Chamber was established. I will say, I can't say enough about the partnerships that we had, with WWBIC earlier on, and some traditional bank executives who really believed in the purpose of what this chamber could do. So I cannot say enough about that. Those partnerships, those earlier on relationships, who believed in this work, and what, just giving an opportunity to those in the Hmong entrepreneurial space. That opportunity was key. So once that happened, started with $100,000, and then it started growing from there. So, and then of course we became a CDFI after having several years of lending. And then of course it was perfect because CDFIs, many of you alluded to earlier, we're not about competing with traditional banks. We're about partnering with traditional banks, to make sure that, because at the end of the day, as many of those who want to have that dream realize that they could have that happen. With CDFIs, we're not here, we're able to provide the support, technical assistance that, traditional banks simply can't do. They don't always do. And also those who come to us typically are those who don't necessarily have a lot of collateral. They want a business loan. They would prefer not to take out a personal loan, which is easier to take out than a business loan. They would rather take out a business loan. And so they come to us if they are denied a business loan through a traditional bank because, the standards are different. There are certain expectations. As a CDFI, the revolving loan fund process over at our chamber, and I'm sure others, CDFIs as well, we take a little bit more holistic approach. You know, we don't just simply look at a credit score, for example. We look at the person's character. You know, do they have experience in this? Do they have a willingness to learn? Do they have some business experience? You know, at least to some degree. And then, you know, then everything together, is it worth this risk? So we take a little bit more of a risk, you know, than a traditional bank can. So again, oftentimes it's working together though closely with these traditional banks. And so we hope that by giving these individuals a chance, you know, to prove themselves, the loan that they hopefully can, you know, get approved through us, that ultimately they can grow their business and then graduate and go to a traditional bank. So that's, you know, our revolving loan fund. How is it? I'll just add this component too, other than the CDFI component that many of you already talked about, but also the cultural piece. You know, let me just give you an example, what we can do. Those who come to us, especially if they're a little bit more traditional in their practices, they might buy their products from overseas, you know, from relatives, you know, in a more remote area. You know, they're not going to have the usual invoices and things like that. So it's our job at HWCC to help our loan review committee understand those cultural nuances and practices, so that, you know, that gives this individual, the potential borrower, a chance at getting a loan. We have done that time and time again, helping our loan review committee understand some of those cultural practices and ways that are certainly not against the law, but just understanding some of those ways of doing business, so that the loan review committee could hopefully approve them. And that has happened more than once.
Absolutely. Yeah, you touched on the you know, the importance of your partnerships. And you know, we're at WWBIC, KSP. We work directly with the SBA. We have some very strong partners here as well. And it's you know, one of the things that I always like to highlight when I'm working with businesses is talking about their network, talking about events where they can build, they can meet partners, they can do that and leverage those partners, you know, for their own success. That's definitely you know, a really important topic, especially for startups. So I have a question for Bella. So you work directly with Kiva Loans. Kiva Loans, they use the social underwriting crowdfunding platform rather than traditional credit checks. How did that model empower early stage entrepreneurs, and how does WWBIC support the borrowers before the Kiva loan process and after the Kiva loan process?
I really appreciate that question. So kind of what Maisie talked about is that a lot of people who start out with businesses, you know, they don't have a business credit score, and you have to start somewhere. Okay, let me start at the beginning. Kiva does not require financial cash flow, financial statements, projections. So when we're talking about those traditional credit checks, there's a lot of things that we don't require. We don't even require a business plan, which can be a barrier for a lot of people. It's this really big document, and people are afraid of it because, again, it touches on the finances and the marketing and the sales, and it's a little bit of everything, and it's a little overwhelming to start with. Granted, you're going to want a business plan. That is how we get you to grow and to have that long-term banking relationships. But to start, it's really overwhelming for people. So what do we do if you don't have physical collateral and we don't require it? And what do you do when we don't have a minimum credit score requirement? Kiva is one of the most unique programs I have ever seen, and it's and what we truly believe from the bottom of our hearts is that if you have a community of people who believe in you as an entrepreneur and your business idea, that you will do well. It is so simple, but so effective. And when you really think about it, none of us, community development, financial institutions, banks, lenders, finance people, will know you better than your community knows you. If you are a nurse of 20 plus years and you want to open a home care, Your clients know you better. Your family knows you better. Your mentors, your business partners know you better than we will ever know you. And I want to get to know you. But when you think about it, if you have a community of people that says, you know, Bella shows up on time, she's always willing to learn, I'm confident that this idea works. You know, we don't have a service like this in our community and we need it. It's empowering to be able to say, okay, we don't need your house. We just need your communities to say that they'll believe in you. And so that's what we look at with crowdfunding. We require you to have a certain amount of people back you up in your community. And then we connect you to a community worldwide of lenders, individuals who will fulfill the rest of your loan. And I could talk about Kiva forever because it's so different. But I want to there were so many different parts to this question. So the traditional credit check, we use social collateral. That's what we call it, social collateral. When you have a community of people that are supporting you rather than a physical object that says you will pay back your loan. And I think who better to keep you to get you to pay back your loan than the individuals who are constantly interacting with you day in and day out. But the next part of this question is, how does this model empower early stage entrepreneurs? So we help you start your business credit score, which if you pay off this tiny, tiny loan, means that in 2-3 years, you will have something to show banks and say, hey, I had a business loan and I was able to pay it back. 2, we don't require a business plan, but we do require you to write a personal story and a business description. And that oftentimes is the basis for a business plan. When you are able to boil down your story into 350 words or less, you know what your business is about, you know what you're aiming to do. And that's oftentimes the description that people end up using for their marketing, their websites, their Facebook pages. And lastly, I think one of the skills that people don't realize they need is just knowing that you're going to have to ask for money. It's embarrassing, especially when you're from different cultures. It can truly be embarrassing, or people can feel embarrassed to ask people for money because they feel like they should already have it. And that's just not the case, right? So if you're starting by asking your friends for $25 and you're practicing and you're asking 15 people and you're practicing your pitch and the way that you talk about yourself and your business, then by the time you reach the other bigger community development financial institution loans, or you reach a bank, you will have that confidence and that ability to ask for money. Because if you don't believe that if you can't ask your friends to believe in you because you don't believe in you, then how are the bankers supposed to believe in you? And so Kiva helps you be your own marketer, helps you build that business credit score, and then helps you with that skill of just asking for money and knowing how to do that. I think that's one of the most important things. And the last part of that question is, how does WWBIC support borrowers before and after funding? Like I mentioned, we've got trainings. We've got trainings on all sorts of things. And our motto is, don't say no, say WWBIC. And then when WWBIC says no, they say Kiva. But then when Kiva says no, we've got options. I don't just say no, I say not right now, because it's not never. It's let's work on your finance. We've got a Make Your Money Talk series that will get you up the right path to good financial habits. We've got accounting classes. We've got all sorts of things. So we don't say never. We just say, let's help you. Let's come up with a plan and get you to a point where you are bankable, where you are creditworthy. And then after the funding, I will check in with you. The great thing about Kiva is we check in with you. Your community checks in with you. And because you got that support on the front end, you have a community of people and clients that are consistently checking in with you through the life of your loan and beyond. So I don't want to take too much of your time, but that's just a little capture of what makes Kiva so different.
Yeah, I appreciate that. And I appreciate you on the panel as well, because it is such a different form of financing. A lot of people don't know about it. When I approach people with the Kiva lending platform, they're just like, whoa, this is, I wasn't planning on doing a GoFundMe. And I'm like, well, it's different. It really is the first step in like the business journey. And I think a lot of early stage entrepreneurs don't understand that it is, everybody thinks, I got my LLC, I'm going to go in, I'm going to walk into this bank, I'm going to get a loan. And that's not the case. It takes time. It takes a lot of learning. Understanding the no cost resources that are out there, especially in the state of Wisconsin. We have a ton of resource providers. Sometimes they're hard to find, but again, sorry, I have an automatic light in my office that keeps turning off. But yeah, at FACC, we have a Rolodex of resource providers and partners that we work with, and we love connecting people and helping the early stage entrepreneurs on their journey. So I have a question for Vanessa. So as a business access advisor, you help small businesses navigate bank loan options. What advice do you have for entrepreneurs who are getting ready to approach traditional lenders, and how can they improve their chances of approval?
Okay, that's a good question, Chris. I guess best way to explain it, and it kind of ties into a lot of what everyone has already said too. Just some of the things that I always tell business owners are probably like 4 key things, right? And the first one I would say is a big one that people probably don't think is important, but it is. It's just establishing like a personal relationship with your financial institution or your banker, right? Whoever you're interacting with. It kind of even speaks to what Macy was saying about, she's and all of it, Bella and Chris, about like partners, right? And Amanda, you have partners that you work with that are financial institutions. So it's all about like who they know. So if you want to make sure you interview your banker, right? Find out who do they know, what networks are they part of, what resources or other committees outside of the bank are they part of, that they could really be that advocate for you, or just be an advisor of finding out like what's going on out here in Wisconsin. There's just so many different programs and resources. It's really hard to manage, especially if you're trying to run your business, right? So that's a really big thing, I would say, that matters and really does deserve a little bit more time. And I think it might be a little intimidating for, excuse me, for business bankers, because I mean, for clients, like they don't want to interview the bankers. They almost feel like they don't want to offend them or something, just tell me about yourself. Like, are you part of a committee? Are you on a board? Like, what networking events do you attend? The businesses that you work with, like what industries are they in? Do you specialize in one more than the other? Like if I'm a restaurant owner and my business banker has a lot of business clients who are restaurant owners and have helped them, they know the industry, so they can help you prepare and ask questions proactively for you to get you set up, especially if this is a new for you, like a new business. I would say the other thing would be your personal credit, right? That matters, especially when you're starting out. It's often that one thing that is taken into consideration when applying for lending when you're going the conventional route. So I know for alternative lending, it's kind of like, let's case by case. But for startups, that's a big thing. And then to carry on with that, right, as your business grows. The other thing, which I have been trying really hard to advocate for, right, is know your business and know your numbers. Financials are probably another thing that's intimidating, right? Who wants to look at balance sheets and P&Ls or tax returns and try to figure that out, right? So it's important for business owners to know, like, what are their numbers saying? Like, what's their operating cycle? Are they going to need equipment soon to grow? Do they understand like what the lenders are looking for? And then I think one big thing is like those financials tell a story, right? Lenders are looking at them to review your financial picture and see what your business story is. And if you can't speak to that to answer certain questions, or your business financials aren't reflecting what you think it should, because you can't review, because we all make mistakes. You might be sending it off to a CPA or a bookkeeper, and they might make an error and you can't identify it, right? Like, it's just going to continue to be a hurdle for you. I think another thing even about that we forget to think about is like just using those financials as a strategic plan. So you have your business plan, right? But the financials can also help you pivot if you see certain trends happening as you're reviewing them and making it a habit on a quarterly basis, on a monthly basis, whatever is most applicable for your business. And then the last thing I would say would be being honest and open, right? And transparent upfront with those partners that you're interacting with. Like, let them know what your need is now, where do you expect to go, kind of what the plans are, what's the realities, right, of whatever financial situation that you're currently in. People can't help you if you're not open, right? And you're not honest about your current state as a business owner. So that's a big thing. I would say like a big key takeaway would be just understand your whole financial picture, business and personal. That's a huge thing because that could really unlock a lot of like clarity, confidence, and opportunity for you to be able to set yourself up for success. If you have a quick second, I just want to share a quick success story, so kind of like that ties into it. I recently helped a Latino-owned construction business. He had been in business for 20 years, a big industry expert, right? His former employer had passed away, and then that business was dissolved, so he had to branch out on his own. And then part of like access business, right? Like what I do with clients is networking with external partners and internal partners, but then knowing what resources are available, right? So he was part of the certification program with CBG's Construction Business Group. And so he went through that program paired with a mentor. That mentor is one of my COIs, so he connected him with me. I met with the client, I brought in one of my bankers. We kind of just had a conversation and identified some needs, gave him some recommendations. And then later on, we kind of set him up with a checking account, credit card, after understanding what he needed, right? He was going to need a line of credit, but that's after just reviewing a couple of things. We tried to strategize what the best approach would be and how much he would truly need because he's a startup, right? So we want to set him up. We want to get him access to capital, but kind of help grow with the plan. So we waited a couple of months. We were able to apply, get him approved for a line of credit. And that really just put him in a strong position to bid on larger contracts and ultimately securing new projects. And that's a huge thing, right? When you're in a brand new business, you want to be able to have the foundation laid out. So that way, when you're getting up and running, you have those partners around you to support you, but then also you have the right tools in place. And I think that's the big thing, is reflecting and thinking about what is needed right now, what might be needed later, and then getting that foundation set up.
Excellent. I actually might have to ask if I can get a recording of that. You know, at least once or twice a quarter, I get a client that comes into the office, and there's a ton of misinformation out there in the Twitterverse or TikTok, and people reference that. You know, they come in and they're like, "Hey, I've got my LLC. I'd like to, give me my money." And exactly what you just explained to them is there's so much more to this story. There's so much more, the proof of burden that you have as a business owner. You have to be able to tell your story, walk to walk, talk to talk. And so that was excellent response. Michael, how are we doing as far as questions? Do we have any questions queued up from the audience? I want to make sure we leave some time to address any questions we may have.
Completely flooded. Everyone wants to know how to get in touch with your organizations and some other questions as well. So can I pitch you the first question?
Absolutely.
Do all of you help with grants as well as loans? Or do you have resources for grants to complement the funding that you provide?
Any of the panelists want to chime in on that? Yeah, go ahead, Bella.
So one thing that we do at WWBIC is if you've signed our client information form, we send out emails as soon as we hear about grants. The other thing too is that with Kiva loans, you can kind of pair them with grants to get that bigger amount. So if we go up to $15,000, you can get a $10,000 grant. That means you have access to $25,000 or something like that. And the other thing too is I would say, I know grants are great because you don't have to pay them back, but think about your credit worthiness. Kiva's a 0% interest loan, so you're not paying to use that money, but you're also building that credit history, whereas you can't do that with a grant. So grants are great in the short term, but thinking about long-term financial health is something that we really encourage at WWBIC. So we do pair our loans with grants. Sometimes our WWBIC loans are built-in grants into the loans themselves, and usually, but grants are so sporadic that when you hear about them, you kind of have to jump on them, and it's really, really hard to kind of jump on the wagon as soon as you hear about them, because usually grant applications, they close within a day or 2 days because we get so flooded with the applications. So I would just keep that in mind.
Yeah, I'd like to chime in on that as well. Something I like to talk with clients about too is oftentimes, and we saw this a lot during the COVID era, the false positives that grants can give your financial statements. Oftentimes a lot of people over the last 5 years, they would take in, kind of an abundant grant funding. And like I said, it gave them kind of false confidence. They would change how they were operating their business because they had an influx of cash. So I'm always wary with grants. We do have access to them. And just like Bella said, they're very sporadic. They're super competitive. So I like to tell people, don't build your business plan based around that kind of speculative funding, basically. Build in finance, look at your projections and do the healthy option, something like Kiva or low cost funds that any of us would provide.
And can I just add one more thing real quick? I would just say, just kind of echoing of what both Bella and Chris say, and then just from like a banking standpoint, if you're thinking about grants, they're looking at your financials, they're gonna see that grant line in there, right? And then they're going to ask questions, and that's what they're going to look at when they're deciding if you're going to get an approval or not. Is this a grant that is reoccurring, right? Which more than likely it's not, and they're going to take that out of what they're going to be including for your cash flow. So it's not, grants are great, it's just when they're sporadic and they can help with a specific need. Maybe it's like to purchase a new equipment for that one time, but not something to use to sustain your business, because when you're requesting a loan application, that's not even going to get looked at, or it might hinder you than it is helping you. It might look fluffy at the time, right? But when you dig in deeper, it's not something that we can apply towards the end for an approval.
Yeah, it's going to say over at our chamber.
I will say,
Go ahead, Amanda.
Sorry. I will say that we have administered some grants through the Regional Business Fund, but it was more for COVID relief, basic things like that. And so we don't have any of those available right now, but we do have we offer mostly low interest loan funds. So they're typically, the interest rates on our loans are set by our board of directors, and they're typically low interest because we want to make them affordable for the businesses so that they can get that funding and be successful. But we do, via our networks, try to keep track of grant funds that are in the area. So if someone is looking for those, we can suggest those when those are available through other resources. So
I'll just say what everybody else said. So I was just going to say something very similar. So yeah, we don't typically have grants. Right now, we actually do have some access to grants through the through Milwaukee County, but those dollars are within Milwaukee County and has to be there has to be a physical location. So there are certain requirements for it. But again, most of our dollars, just like Amanda mentioned, were COVID related. ARPA funding that has, I think for many of us have already, are long gone. So, the grants are pretty sporadic, as Bella mentioned earlier.
Do we have any other audience questions? It looks like we're coming pretty close to time. And actually, are you guys sharing our contact information with audience members? Because feel free, I'd like to speak on behalf of everybody. Our contact information, when you get it, send me an email, give me a call. Any questions any audience members have, that's what all of us are here for, is to answer these questions.
Thank you, Christopher. If everyone on the panel is okay with their contact information or their organization's contact information being shared. I know a couple of you already have assented to that referral. That would be great, and we can certainly field any questions that way that come through. Would you like to try one more question, or should we cut ourselves off?
We can keep it short, and then we can give everybody a little bit of a break, go refresh their coffee.
Great. Okay. Maybe last question then. Is there a reason that a business owner should or should not use the personal credit versus credit in the name of the business?
I can start with that one because I answer this a lot. Is there a reason not to use personal credit? In my institution, there's no option to not use your personal credit. That's kind of the answer there. A lot of people, and like I was talking about that misinformation, a lot of people think once you get your EIN, your personal credit history disappears. That's not the case. We work with 15, 20-year-old businesses. We're still going to take a look at the personal credit just to see if there's anything there that might hiccup or hurt the cash flow of your business.
Yeah, I would say same for traditional lending. I mean, I can't speak for all banks, right? But I think even in partnerships with CDFIs and what they're looking at, like your personal credit is really telling your character, right? And you're kind of showing your ability to pay things back, and you're applying for something with a stranger. So it's kind of like you have to think about, like, I'm giving if it's like I'm going to borrow money to this person, I need to know who they are and what they're about, right? A lot of when you're applying for any type of lending, they might add you on as a personal guarantor, or they might even be looking at your global cash flow. So, personal debt, business debt, income on both sides. Do you have the capacity to pay off any new debt? I think sometimes when I'm talking to business owners, they're seeing it as like, oh, I want to have it separate. It is still separate, but we're kind of like, the global view of everything is making sure that we're not setting you up for failure. We want to make sure that you're not feeling financially strained. So you have to look at the whole picture because you are a part of your business. And you are adding yourself as that personal guarantor because you believe in your business. So I think there's a lot of that TikTok stuff. And I don't have TikTok anymore because I get so mad. I'm getting mad at this misinformation. I'm taking you out. So I think a lot of people have that misconception of it, but it is important. It is something we look at. That's why that's one of the tips I say, like, work on that personal credit. There's organizations that can help you. At US Bank, we partner with Operation Hope. So we partner with them exclusively. So if you are someone we refer over to them, they can help you, whether you're establishing credit or repairing the credit for free. So you really have that one-on-one mentor coach to walk you through that. Because I think another thing would be in the TikTok world of how to improve your credit like overnight. And it is a process. It's just about, having the right people in place.
Okay, well, thank you all for being here for this panel discussion with lenders. The audience certainly was responsive to everything you had to say. And so, Christopher, I'll leave it to you to close out the session.
Cool. Yeah, just quick thanks to all the panelists. Thanks for being here today, guys, and sharing your expertise. Definitely want to thank WWBIC, Small Business Academy. This is one of my favorite events of the year, so it was really cool to moderate one of the panels this year, and just really for hosting such important conversations for small businesses. We really appreciate. I can probably speak on behalf of everybody. Your continued commitment to advancing small business success in Wisconsin, and also WPI. Thanks you guys for doing all the tech stuff that I always fumble with. So.
Thank you, Christopher. Okay, and to all of you in the audience, don't go anywhere. We will be right back sharp at 11 with our final session for the day. There are other sessions to come. 11 o'clock, we will kick off Small Business Story, Overcoming Challenges of Launching and Growing. And for the next 5 minutes, please fill up with coffee.
Thanks, everybody.
Thank you.